Woods and Kevin Green join me. Also, Urban Outfitters, which is kind of like our main winner of the group here this afternoon, because even though it got hit in the last couple of weeks, it still is on the back of a good multi-year run, and especially what we heard from all the retailers today being sort of the bedrock of our rally, Caroline. It feels like Urban Outfitters has kind of got the red carpet rolled out for it right now.
It seems like that, although it was a mixed picture for retail, right? Macy's obviously disappointed to the downside with that mixed report and slashing its full year guidance. So we saw the likes of Nordstrom and, Kohl's go lower on that. But Urban had, it was up 3% today, is down about 10% this month heading into this report. But we saw other stocks like Urban and Abercrombie, American Eagle all rise today. Could be because Target talked about apparel being a bright spot for the company, but Urban, of course, is at a higher price point with Anthropologie, with Free People. They also have the Nuuly business with the rental business. Urban Outfitters, the namesake, has been kind of the weak link. So it seems like there's some optimism for Urban, but we are talking about a cautious consumer that is very value driven. And I'm not sure if you've been to Abercrombie lately, haven't seen a whole lot of values. So we'll have to see. Yeah,
I haven't. I haven't. That's it. I just haven't. I don't know. Maybe I would look good in those clothes. I don't know. I've never tried them on. I've never once. Freshman year of college, I bought a shirt from American Eagle. 2 polos. They lasted me the entire college experience, but that's it. Never shopped in Abercrombie or American Eagle or an Urban since. But they become immensely popular, and I feel like I see them around. I'm starting to be able to recognize them because it's now the millennial trade, but it's also, I think, the young people wear them too. All right. So your point though, Urban hasn't been quite as successful as the Abercrombie story has been, which has just been eye popping. KG, you're more a Brooks Brothers guy, rocking the suit every day.
No, not at all, man. Honestly, I just rock this stuff, and the rest is coming from Bass Pro Shops and stuff, man. So, but
there are still ties in BPS.
You never know. I think a lot of the retailers over the last couple of years have definitely streamlined their businesses too. So they were in a situation where inventory builds were obviously getting a little bit out of hand. They had to cut a lot of prices, and they were able to right size their business. So you are seeing these turnaround stories of these retailers really trying to outperform, especially when you're looking at clothing and apparel. So if that trend's going to really continue, especially for Urban, which really does kind of also utilize the wholesale network, then that could actually be an overall benefit for this company in the near term. And once again, I think the market has been paying for a premium for these brands that have been able to show leadership and cost discipline.
Okay. That's really been a good part of it, too, the cost discipline, some creativity as well with all the different businesses Caroline mentioned there. Snowflake and Zoom, I think, are probably the more kind of maybe meaningful ones. Let's talk Snow for a second because just this has been such a frustrating trade for so many over the years. Closed at $135. Of course, you rewind the tape and this thing traded at $420 back at its debut in 2020. So this is sitting at the lows. They're still operating at a loss. $317 million, 95 cents a share, which at this point feels a little bit archaic after the year of efficiency, which so many cloud companies took part in throughout 2023 and coming into this year. It's like they didn't get the message, and at this point that makes me feel like maybe they don't know how to make money. I mean, not to be harsh, but this is 30% plus revenue growth. They've got to be able to string something out of it for the bottom line, but it looks like the margin also shrank a little bit compared to a year ago. 73% gross margin versus 74% a year ago. Still basically a little bit better or on par with what the street was expecting. But still, it's just a lot of growth with not much sticking around, Caroline. They're bleeding money.
Yeah, we knew margins were going to be under pressure. Obviously, they're investing heavily in AI initiatives, so they're seeing increased GPU-related costs. So I think that was sort of the expectation heading in. They actually lowered their full-year operating margin guidance back in May to 3% from 6%. But I'm actually just looking at the numbers here. In terms of overall revenue, $868.8 million. That's actually higher than what analysts were expecting. Analysts were expecting around 850, which would represent about 26% growth. So that's a beat. And then I see in terms of commentary for product revenue for the quarter, that was $829.3 million. That represents 30% year-over-year growth. Net retention rate was 127%. But I did see some commentary here about product revenue, that they're actually raising their product revenue guidance for the year because it surpassed the high end of the range. So some positivity around that, but yeah, you can't help but notice the fact that they're still operating at a loss. I think with this one though, it was down 33% year to date heading into this report, and it was wondering if the expectations were low enough for Snowflake to potentially beat them, but it doesn't look to be the case because I'm seeing some red here on these results.
Yeah. It's just, I get that they're investing, but like, where's the payoff, man? Like, how long is it going to take? And there's a good bit of competition too, so it's not like they're, I don't know, I don't use the products obviously, but it seems like, from what I understand, like there's a lot of competitors and kind of overlap. What do you think, KG? They missed the top line. They're losing $300 million a quarter still. What's the turnaround story? Is there an obvious bull case?
I think it's going to be the AI front and having them actually integrate artificial intelligence into their platforms. Now, they continue to talk about that, but it seems like it's a little slower than what the market had expected. Also, looking at the remaining performance obligations, I think you wanted to see a little bit of a meatier or better number than what was actually brought in for the quarter here. When you're looking at ARPU, came in at around $5.2 billion. That's 48% growth on a year-over-year basis, but once again, you won't want to see that actually decelerating because that's going to be the future revenues for this company. And if you're having issues and operating expenses are going up and margins are getting squeezed, you need to have the back end revenue in order to be able to pad that stat in the future. And it just seems like that's not going to be the case, or hasn't been the case so far. So when we talk about especially Snowflake and certain cloud providers here, it's all about storage. It's not really compute. And so are the enterprises really needing a lot of storage right now, or do they need compute power in order to train models? That's not really in Snowflake's wheelhouse. They have exposure to it, but it's not really their primary product offering at this point.
Isn't data somewhat like commoditized at this point too? Like, don't you have a wide array of options on how to process, store, like Datadog? I mean, like, again, there's like 20 companies I feel like in this list.
Yeah, so there's a lot of things that you can do with data. Right now, what you're seeing as far as performance is those individuals that can actually provide compute in order to train models and be able to utilize the infrastructure that they have or the data centers that they have to train those models. And then you have basically just the storage of data. So there will be a tailwind for them as we start seeing, or obviously hard copy paper going into cloud and then utilizing their storage solutions. And they have some artificial intelligence and some programming and back end to be able to support those efforts, but they're not on the inference side of the business when it comes to AI. And so this is really where you're seeing that separation when it comes to AI infrastructure in general. And they're probably going to be, a tier 2, tier 3 type of beneficiary down the road as data gets bigger and bigger and these models get bigger and bigger.
Nothing sounds terribly exciting or bullish in that, I got to be honest. Okay, let's talk some Zoom here. Maybe a little bit of a better number, more potential for a turnaround, even though it's kind of still a one-trick pony. Check it out. Zoom trying to win over the hearts of all the users that enjoyed it and then abandoned it after COVID. I feel kind of bad for Zoom. Zoom came to the rescue. Zoom really came to the rescue. Playing poker with friends on Zoom, work meetings on Zoom, seeing family on Zoom, and then it was like, all right, bye Zoom. But I don't know, maybe a turnaround here, Caroline. These numbers are pretty decent on the forecast.
Yeah, this is another one that was a big year-to-date loser, down about 17% heading into this, and it looks like shares are moving to the upside following it's a beat on both the top and bottom line. But I will admit, it does feel like an old friend that we've abandoned a bit. But in terms of Q2 adjusted EPS, $1.39, the expectation was for $1.21, so that's an easy beat. Sales were expected to declined slightly to $1.15 billion, but they actually came in at $1.16 billion, so slight beat there. And then it looks like the Q3 outlook is pretty good too, guiding for Q3 EPS of $1.29 to $1.31. Wall Street was looking for, and then revenue of 1.16 to $1.17 billion. Both of those coming in better than what Wall Street was looking for. Meanwhile, for the full year EPS of $5.29 to $5.32 per share, analysts were looking for $5.05 per share, so that was an upside surprise there as well. And revenue of $4.63 to $4.64 billion. Wall Street was looking for 4.62. So this looks like a beat, and it looks like revenue for the current quarter and for the full year both are coming in better than expected. And it looks like shares are being rewarded a little bit after this. They were up about 2% heading into this report, adding to those gains a little bit in the after hours. So we'll have to see what Zoom has to say. Also, they've been trying to incorporate AI more into their product offering.
Yeah.
So we'll have to see if that maybe any commentary around that gives some additional upside.
Yeah, it seems people are really into like the AI summarization of stuff. I don't know, maybe I don't really get it because like my job is like here in the studio, but I guess if like you're on a lot of meetings all day and you're taking a lot of notes, then it's helpful to have like a little robo there like spinning everything up for you. KG, decent potential utility for AI and Zoom long term. You think the bottom might be in for this?
They have still a lot.
Hey, you're on Zoom, by the way.
Yeah, exactly. Yeah.
So
they have a lot to do as far as explaining to do when it comes to their business and their vision moving forward, right? We might be seeing a little bit of a trough when it comes to the demand weakness within their industry. But once again, what are they going to do moving forward? What is actually very promising, though, if you look at the numbers, operating cash flow grew by 33.7% on a year-over-year basis. That's good. If you're looking at free cash flow, that grew 26.2% on a year-over-year basis. That's good. And then I believe that there's going to be on the conference call, this is what I'm actually anticipating, Oliver. You are seeing this trend, and we're in a political season right now, and there has been a trend over the last month or 2 months where individuals, large groups are utilizing Zoom meetings in order to campaign, raise money, and it's kind of taken off like wildfire. What is an analyst will probably ask, how effective is that? Are they seeing any type of uptick? And I think that's going to be a telltale sign as far as their vision moving forward, because all of those users that are on 1 million people on a Zoom call, you would have to think that maybe some of those users are actually picking up this product offering. And so that's what I'm actually looking forward to for the conference call. I think that will probably be the main driver for the stock to really push higher here.
Okay. Seems like they're retaining some customers, maybe finding some new ones. Before we go, since we hyped it up, let's talk some Urban Outfitters real fast. Caroline, numbers are out. Stock's not doing much. Did get a little bit of a tick higher there. What do you think of the report?
Yeah. Not doing much, but this was a beat. I mean, adjusted EPS of $1.24. That's about 23 cents higher than analysts were expecting. Actually, a little bit more than that if you look at some of the estimates. Sales increased 6.3%. The company said it was a record $1.35 billion. The expectation was for 1.34, so only a slight beat there. Comp store sales in terms of the retail segment increased 2%. If you take a look at comp sales at Free People, they were up 7.1%, 6.7% uptick at Anthropologie, and then they did decrease 9.3% at Urban Outfitters. As I said, that's really been the weak link. Nuuly segment net sales, though, that's the rental division, was up by 63%. So not seeing a whole lot of action in terms of stock reaction, but it is a beat on both the top and bottom line. Haven't seen anything in terms of the outlook yet, but they talked about robust demand in May when they last reported, and it seems like that demand is holding firm based on these results.
All right. Comps can still use some help, but at least, they're moving the earnings up quite a bit relative to expectations. So to the point about the financial cleanliness of the business, looks pretty good. All right, we got to jump. Thanks, guys. Appreciate it very much.